Time now to spotlight the U.S. trade agreement with China. Joining us for insight, we've got Derek Scissors, Asia economist, American Enterprise Institute. Derek, thank you so much for joining us today. All right, let's talk about what we got from this weekend. A lot of people who were observing what came of that were expecting, kind of just the opening gambit of talks. But now it seems like we've got this 90-day resolution. In other words, how do you interpret that?
Yeah, it looks like the U.S. wanted to jump a couple steps because the Trump administration became worried about pending shortages. We're still going to have shortages. They shouldn't be too widespread. They shouldn't last too long. And that's because we essentially unfrozen China trade, where at the very high tariff level, people just didn't even bother shipping. Now, some goods are going to be more expensive and some goods won't get shipped, but most of them will get shipped. And so I think that's the reason for the jump, that instead of taking a step forward, we took two or three in order to avoid a prolonged period of shortage at the end of this month and into June.
Okay, and so what's your view on what needs to happen in terms of a more comprehensive deal? Because what we've observed is the pattern is, when it came to the U.S. and the UK, we got the framework of a deal. And with China, essentially, it sounds like it bought us some time. But what's your view on the approach to a comprehensive deal with China?
Yeah, I just don't see how it's going to happen. I don't mean that they won't announce something in the next 90 days, because they probably could do that. But they're two huge obstacles, and they're connected. We have Secretary Bessent sounding like all his predecessors at Treasury, talking about how China's going to make these big changes. And President Trump said China's removing all their non-monetary barriers, a statement I don't think he fully understands. Neither of those things is going to happen. China is not going to make big changes for the sake of the U.S. It never has. We've been asking for this for 25 years. It's not going to remove all barriers to U.S. exports. And so when that doesn't happen, we're going to not see it in 90 days, but when that doesn't happen, that's going to be a big problem. And the other problem is the U.S. trade deficit with China isn't going to drop. We're going to get this short drop because of very high tariffs, which have now been suspended. And when if those tariffs aren't reimposed, which, that's not a great outcome, but they aren't reimposed, we're going to get another surge in China trade. So, less than a year from now, President Trump's going to be looking at a very large U.S.-China trade deficit and a Chinese economy that isn't reforming in the way he apparently thinks it will. And we're going to be back to this situation. We can get a deal over the short term. It won't last.
But is there no, here on Wall Street, we are noticing a lot of optimism around that. And I think, even there's something to be said by how quickly we at least got a short-term deal, if you will. Do you have any optimistic view about this, how this could potentially play out?
I think the current outcome is optimistic. That's why the market was fairly resilient coming into this weekend. They thought there was going to be a climb down. There was a climb down. It was a little faster than people expected. So that's also optimistic. I just don't see how we can get much farther from here on a sustained basis. So I'm not arguing that we're going to go back to 145% tariffs and a virtual embargo. I just think if people think, well, this is a big step, but we're going to take another big step, that second big step isn't going to work. And again, if you made U.S.-China trade more open, you would get a very large trade deficit with China. And I don't think that politically works in 2026.
So what is the new normal from your view from here, especially if you feel like, to go back to your original view, that, a more comprehensive deal was not going to be as, kind of rosy as people may expect? What's your take on what the new normal would be in terms of tariffs?
Well, I think we're going to end up at the max 25% from the first term, which everybody forgets about. That's still in effect. And then a 10%, reciprocal tariff that we're going to apply to a lot of other countries. So we're going to have a max 35%. And then they're going to be sector tariffs, which are probably going to be at 25%, because that's a number that President Trump seems to love. And then we're going to have exclusions. So you're going to have a differentiated tariff rate with max 35%, a bunch of sectors at 25%, and then exclusions where some sectors that are sensitive, they're much lower. They're at 10% or below that.
And let me ask your thought on this. Secretary Bessent made the point, calling it a strategic decoupling. How do you interpret that?
Well, it's odd, right? He says China's going to make all these changes. President Trump says China's going to make all these changes, but then the U.S. is going to be involved in a strategic decoupling. I'm in favor of a strategic decoupling, but that's because I'm very confident China won't make those changes. if China were really changing, why would we need to strategically decouple? So I think Secretary Bessent is hedging his bets here. And he's saying, look, we're not going to go back to the old relationship. That's just not on the table. We don't want to have an embargo. We don't want to have a freeze on huge volumes of U.S. and Chinese goods. But let me warn you, by using strategic decoupling, there are going to be some places, certain sectors that the U.S. values, where the U.S. and China are going to separate.
All right, we'll have to leave our conversation there for today. That's Derek Scissors, Asia economist, American Enterprise Institute. Derek, thank you for your time and your insight.